Well, thank you for inviting me to speak. I mean, this is a very topical subject. You may have seen this afternoon Mervyn King tossed a sort of bit of a hand grenade into the whole debate about banking with comments on the future of RBS. Yesterday we had the major vote in the European Union Council of Ministers about bonuses. I mean, this is an issue that reverberates from day to day. And maybe I should just start by going back a little bit. As the Vice-Chancellor pointed out, I once did economics. One of the best courses I ever did at university was a course on money and banking given by a man called Charles Goodhart, who since became a member of the Monetary Policy Committee. And then I discovered that a generation later, very, very few universities taught banking as part of economics courses. It was regarded as very boring and of no relevance whatever to the real world because, of course, banks were totally stable, uncontroversial, nothing ever happened in that field, so it wasn't necessary to teach students about it. And a generation of students were taught all about, for about 20 years, about rational financial markets and that problems automatically correct themselves and there was no need to worry about the way banks function. Anyway, that's all changed. I started to get interested in banks as a problem. I have no real background in it. I came out of the oil and gas industry. Around about 2000, there was a wonderful report by a man called Cruickshank who pointed out, it was rather out of the blue, that the British business banking system just didn't work very well. It was monopolised. The banks were earning large economic rent. It was highly inefficient and uncompetitive, and something should be done about it. Well, nothing was done about it. Some of us started attacking the government of the day and saying you should be implementing their recommendations. But anyway, it was a boring subject, and the banks were very big and powerful, and nobody wanted to contradict them. So the problem went away, politically anyway, until it came back in 2007. The beginnings of the crisis. You may remember Northern Rock. I got heavily involved in that at that stage and have been living with this subject ever since, trying to understand it. I wrote a book a couple of years later called The Storm, which was partly an attempt to educate myself in understanding why this crisis happened. And I think the point to begin with is that banking collapses are very unusual, certainly in the UK. We went through the big trauma of the 1920s and 30s, the Great Depression. The British banking system did not collapse as it did in the United States. In fact, to understand in a British context what happened when banks collapse on a systemic scale, you have to go back to the early part of the 19th century. And actually, the best British description of a bank collapse is in the columns of John Stuart Mill. Nothing much since, and that was, almost 2 centuries ago. But of course, there have been financial crises in other countries, most recently in Japan, in Scandinavia, had big banking collapse 20-odd years ago. They recovered from it quite quickly, but it was big while it lasted. The Asian countries went through a financial crisis, or the Far Eastern countries went through a crisis in the beginning of the 1990s. And the consequences of these things are very profound. And we've now discovered this in the UK, because the banking sector in the UK was massive. I know academics will pick me up and say this is a slightly sloppy measure, but if you simply take the balance sheets of the UK-based banks, the big four, as a share of GDP, you're something of the order of 400, 500%. Now, of course, that includes a lot of complex derivatives and double counting, and it's not an accurate measure, but it gives some measure of the scale of the British banking sector at the time of the crisis. It was, I think, probably second only to Iceland, and possibly not even more than Ireland. We were exposed to the risks of the banking sector. Argue till the cows come home about who was to blame for all that, but that's what happened. And as a consequence, when one of the big global banks, RBS, which was actually in balance sheet terms the biggest bank in the world at that time, Barclays almost went down, together with quite a few mortgage banks. The consequences for the UK have been catastrophic, and we're still living with it. I mean, the metaphor I often use is that, you know, we've suffered the economic equivalent of a heart attack. And heart attacks, you know, they have long-term consequences. You know, you can be saved, and, you know, the British economy was saved from collapse, but we're still wired up to drip feeds with steroids, monetary policy, and we're still ailing. And the two major consequences that we have are, first of all, this massive structural deficit in the budget, caused by the fact that a high percentage of government income derived from the finance sector. And secondly, the fact that banks are damaged and are not lending normally to productive bits of the economy. And those are the two central issues that the government is grappling with in its economic policy. And in terms of the banking sector itself, we're in a difficult position, because the banks are being pulled in two different directions. On the one hand, we're wanting the banks to lend to business, because how else do you get growth and recovery? But on the other hand, the banks are retrenching, and they're retrenching under pressure from the regulators, who want them to hold more capital, who want them to sort out their balance sheets and reduce their risk, and they're contradictory objectives. If I can choose a slightly vulgar metaphor, which somebody gave me a few weeks ago, but I think captures it rather well. The banks have been simultaneously fed with drugs to stop diarrhea and to stop constipation. You know, both are happening at the same time. At the moment, the anti-diarrhea drugs are working better than the others, so as a result, credit isn't going out through the system. But there are contradictory medical objectives being pursued on the same body, and you can see the problem. So that's by way of background, but what I want to talk about today relates much more directly to your conference, because while this issue of the banking collapse is being dealt with and the regulatory implications, there is a longer-term issue for the UK about the basic structure of banking. Even if we hadn't had this collapse, we should be dealing with it, which is the fact that we had a very, very high concentration of ownership. 75% of personal accounts and 85% of business loans originate in 4 banks. One of them is now largely nationalised, one is semi-nationalised. Barclays are at least partly owned by a Middle Eastern country which rescued them in the crisis, and HSBC are a big international bank. But those 4 banks between them effectively dominate the banking marketplace in the UK. Enormously in contrast with the United States, whereas I'm sure you've heard in your early sessions, there is a tradition of community banks, not always stable. I mean, you know, US banks, a lot of them folded at various times in recent history, but certainly much more diverse. Markedly in contrast with the German Sparkassen system. I met your speaker from Germany here he is, who I met in Germany quite recently. And it is a wonderful system, actually, and, you know, in so many other ways. The German model, the localized, decentralized banking, together with apprenticeships, together with Fraunhofer's for innovation, represents a superb model of how to run a modern industrial country. But anyway, we haven't got that. We've got a totally different system. And you know, the UK's banking structure is just horribly inappropriate. We used to have local banking through building societies, of course. That only dealt with mortgage lending rather than business lending. But we did have genuine community banking. The demutualisation of building societies was one of the great disasters of modern economic policy. Every single one of those demutualised banks, demutualised building societies collapsed or has been absorbed in another bank. Not a single one survived. And in the meantime, those that did stay in the mutual sector have increasingly amalgamated. You now have giant mutuals like Nationwide, to some extent the Co-op. Co-op isn't quite a mutual in that sense, but, and the small, localised town building society with a very strong local identity has become a very reduced figure in the British banking scene. So that's where we start from. What can we do about it? What is happening? How do we get away from a structure that was over-centralized, disconnected from local communities, uncompetitive? How do we get away from that? Well, I think I'd just like to say, first of all, something about the trends, some things that are beginning to happen that are healthy and encouraging in creating a more diverse banking ecology, could I put it like that? Secondly, something about the policies that are where we're hoping to drive diversity. And then thirdly, something about genuine local banking and how we can progress to it. But in terms of what's actually happening at the moment, there are some good things happening. We are now at last getting some new banks coming into the UK, which particularly in the business lending area, Metro, which started in London, is now spreading in the south of England, does personal and business lending. You've got Handelsbanken, the Swedish bank, which very high quality small business lending. Aldermore, Shawbrook, operating different models, but coming in, competing. I mean, together they've only got 1 or 2% of the market. It's not a big deal, but they're growing rapidly, and they recognize there is a real need in the UK for more competition and diversity, and they're beginning to fill it. Secondly, there is a lot of non-bank lending going on. You know, out of sheer desperation, quite a lot of companies are simply going round the banks. So you're now getting peer-to-peer lending, you know, groups of local business people sitting on cash savings, don't want to put it in the bank, so they're looking for local businesses who they can lend money to on an informal basis. Quite a lot of that's going on. You've got crowd finance on the internet. You know, new entrepreneurs starting up today are most unlikely to go to their local branch of NatWest. They're likely to plug into the internet, identify a crowd source, and raise money that way. More productive, probably a lot cheaper. We're getting the revival of forms of funding like factoring and invoice discounting. They're relatively expensive, but they work for many people. We're getting a revival of interest in equity. There is an institution called the Business Growth Fund that I met this morning. It was actually funded by the banks. They've got, I think, 2 billion or so to spend, 3 billion, and they're investing it in equity ventures for rapidly growing medium-sized companies, filling a big gap in the market that used to be filled by an institution called 3Is. So you are beginning to get diversity and choice, but it's so far small scale. The big game changer would be if the Lloyds divestment to the co-op went ahead. It's been agreed. A lot of people have been told that their accounts are changing. We hear it in the press that this is actually quite problematic for the co-op. But if it does happen, it will be a very good, healthy injection of competition. So those are some of the good things that are happening. Secondly, government policy is trying to push us more and more in that direction. More diversity, more competition. The FCA, there's a lot of acronyms in this area. The Financial Conduct Authority, one of the bodies that's come out of the FSA, which failed really in the crisis, has now got a mandate to promote competition. The FSA itself, the existing regulator, is committing itself to clearing away some of the obstacles to establishing a new bank. If you talk to some of the people like Aldermore, for example, the horror stories they had in getting established, getting approval, the capital requirements they had to meet, massively incentivizing for new banks. That is gradually being whittled away. The regulators have realized that they were hopelessly biased to supporting big institutions, so they're trying to reverse that. In addition to that, there is the payment system, which acts in a monopolistic way. This is the point that Cruickshank pointed out, that if you're a new bank, and you're trying to get into the clearance system, which is what you need to do if you're clearing checks, basically it operates like the old British telecom monopoly, network monopoly. Getting access to it is expensive, it's capricious, and it squeezes out the newcomers. So you have to break up that monopoly. And again, there is now an acknowledgement that we have to act on that. and switching. Extraordinarily difficult to switch your bank accounts in the UK if you're a business or an individual. I think the figures show that people are less likely to change their bank account than they are their husband or wife. It is very, very difficult and often leads you in a mess. So this process is now beginning. It's not going to have complete portability unless you can take your full bank account number with you. And we're some way short of that, but there is now a commitment to do it. So there's a whole set of policy interventions getting us to closer competition. And the final one I mentioned is I've been charged with establishing a new business bank, government-backed. We got £1 billion from the Treasury plus guarantees. And we're going to try through this new institution, it's just been established, to create new flows of funds to support these new challenger banks, to fill in gaps in the market like the absence of long-term finance to small companies. And hopefully over the next year or so that will begin to make an impact. So those are two areas: the new competitors, government policy initiatives. Thirdly, I think things are now beginning to happen to recreate relationship banking. One of the things the Big Four destroyed in the last decade was their own relationship banking networks, the so-called Captain Mannering system. That wasn't always perfect. I mean, it involved the local bank manager often doing deals with their friends at the golf club rather than operating professionally. But nonetheless, it did have a local connection, and this was stripped out, and bank managers became people who sold you payments protection insurance or whatever on the discount, on a commission. And we lost relationship banking, which was critical for small business. That is now being reintroduced. The banks are retraining their staff to do the things they should have been doing all along. It's beginning to happen. They've created a proper complaint system. If businesses, small businesses are turned down, they can go into a type of ombudsman. We're discovering that about 40% of all appeals have been upheld, which tells you something about the quality of decisions. We're also demanding in government that they start to provide information down to borough level or constituency level, so we know exactly what they're doing where, so you can trace the witnesses in their relationship banking system. And then finally, the possibilities which your conference is focusing on, which is opening up genuine local banking, which, as I say, largely disappeared with the amalgamation or demutualisation of the local building societies, and we haven't had very much of it. It is an interesting question as to why this is so weak in the UK, why we don't have anything remotely like the Sparkassen system. One or two interesting things are happening. The CDFIs, the Community Development Finance Institutions, we're giving them a bit of funding through the Regional Growth Fund to lend to very small companies. And we've got an agreement which has been brokered whereby if the big banks reject a small business, they will pass them on to the CDFIs. It's small-scale stuff, but it's very positive. We've then got the genuine local banks, and EDRI, which has been going for a century and a half. It's those of you who know Scotland, it's south of Glasgow. I don't know quite why it kept going when no one else did, but they have a genuine local bank that people save in and borrow from. We've got these that are now being launched. You've probably heard about in Hampshire. The Cambridge Bank seems to be a serious proposition. I was in Burnley 2 weeks ago. There's this fascinating character called Dave, who acts as a personal banker to Burnley. He goes around in his Ferrari and lends money to chip shops and all kind of people. They trust him. He pays better interest rates on his deposits than the banks do. And he's got a good track record in getting his money back from lending to business. But it's very, very personalised. But we need lots of banks of Dave. And slowly, the UK is beginning to create that kind of structure. So I've come here to learn as much as to preach. So I look forward to hearing what the other speakers have to say. But I think, concluding thought, we've got a massive problem. You know, collapsed banks, an absence of local banking, there's a vacuum to fill. New ideas, new initiatives, that's really what we're looking for. Thank you.